Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, February 21st, 2024. The Bears looked like they were actually going to put 3 days in a row in, and I'm kind of a betting man. I'm going to say that the NVIDIA earnings kind of got leaked out, and it was really the last 30 minutes where we just saw the S&P go from minus I think 25 to plus 6, and that was just this little, just nonstop bid back up. So it was, we made it, this wedge right here, kind of, you could say it played out because this was really the target area right here. But the thing is, I want to show you, because I'm actually getting intrigued by these volume profiles here. And what it is you can see that these are the previous point of controls. So as much as it doesn't, it doesn't really look like it was support here, but it came down for a second, and then this was really the bullish candle, and from there they spent the the last hour just driving price up. So right now, if we're going to look at it, just keeping this into play here, what we would do is say this is really the resistance, because you can see previous point of control, and that's right around the 498. And if the bulls can push through it, then we're looking into this congestion area here, where you can see these are just where the average volume was, and then we just look at the next volume profile where the point of control was changed. So these are your resistance areas. So if we go back to the S&P here you can see we have the crossing moving averages. We made it up into the resistance, but I know NVIDIA's earnings were good. I don't know if that's really going to spark the futures or not. I can actually take a look at it right now and see what the ES. Yeah, the ES is plus 23. So they're using those earnings to drive it up. So we'll see if it's able to hold overnight. Again, I really don't think one company really should be moving the market like this. It's kind of crazy. But in any case, the Fed minutes came out. They said they're not in any rush to start cutting rates. So the market continues to run. The bears, they every time they look like they have any kind of footing, they slip and something happens and they're back, marching towards the highs again. So they're not dead yet, but this move kind of hurt. And if they start gapping up and get it close to this, 5,000 level, this is really going to be the last line in the sand for the bears before we start testing these highs. Now, if we come back down in overnight trading, really what they're going to have to do, the bears are going to have to get it through this 49.50, which was the pivot that I mentioned. And from there, that's where we're going to start getting the move down into the next support zone, which is the 49.31 down to the 49.18. We did have some bullish divergences on this, and you can see that this was the power move down, and then from here we were just kind of sliding. So it didn't really look too bearish right here. And again, you can see we had the bullish divergences. If we look at the 60-minute chart, we really, I guess we can say we had them, but it's not really defined like I like to see it. But you can see on the momentum indicator, we did have some clear divergences. So again, right now we're back at the 50-day moving average. If they get above it, we have the gap. And then, from the 60-minute chart, we don't have resistance, so we get up to these highs. But you can see on the 15-minute chart, the 50-20 would be the next resistance area if we get through this level. And again, if they take it down, then this is what we're looking as far as the support. So there's really nothing else to go over. We're just stuck in this little range right now. The bears can't get any traction going. Every time they're getting to an important pivot, what's happening is the bulls just drive it right through. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.